Right now, at this very second, over $500 billion is being poured into a technology that, wait for it, 80% of corporations admit has delivered absolutely zero productivity gains. Welcome to this explainer.
Look, today we aren't just looking at a few bad investments, we are conducting a full-blown market autopsy.
Behind closed doors, the world's largest companies are waking up to a terrifying truth. They're trapped. Trapped in a massive hype cycle, bleeding cash for software that their own employees are literally ignoring. We've been fed this narrative that AI is the next industrial revolution, right? But the dark reality we're about to unpack shows something entirely different. It's not a technological shift at all.
It is a $500 billion bet. Let that number really sink in for a second. $500 billion. It's a staggering, honestly terrifying scale of corporate panic spending. Executives felt this acute, totally manufactured panic. So what did they do? They poured concrete from massive new data centers, they practically drained regional power grids, and they bought up advanced microchips by the hundreds of thousands. And why? Because of FOMO, pure fear of missing out. If they didn't buy in, their stock price would get absolutely hammered. If they just casually dropped the word AI 15 times on a quarterly earnings call, their market cap would jump by billions overnight. But as the ink finally dried on those massive enterprise checks, what was the actual payoff?
0% measurable ROI. That is the core thesis we have to confront today. When the actual software finally landed on the desks of everyday office workers, the entire illusion just shattered. $700 billion has been pumped into the broader AI ecosystem and has resulted in a mathematically rounded total of 0% measurable US GDP growth. The distributed economic impact they promised, it simply is not there. So the brutal truth we need to face is that we're looking at a multi-billion-dollar lie.
So let's break down exactly how this happened, starting by exposing the hype, the golden promise versus the grim reality.
Look, every massive corporate failure starts with a really good story, right? Silicon Valley built this airtight narrative with undeniably masterful sales pitches. They walked into boardrooms and promised autonomous customer service agents that never, ever sleep. They promised flawless financial analysts that don't make mistakes. They promised 10x programmers. But the reality? We've seen a 222% spike in enterprise AI spending with absolutely zero distributed economic growth to show for it. These boardrooms weren't actually buying software to improve their workflows, they were essentially buying extremely expensive insurance against becoming obsolete.
So if the companies adopting this stuff aren't seeing a dime of return on investment, who is actually making money off this mass hysteria? Well, follow the money. It leads straight to a very tight, tiny circle of infrastructure gatekeepers. The massive consultancies, the McKinseys, the Accentures, the BCGs, they pivoted immediately, charging mid-market companies millions of dollars just to draw up these vague AI integration roadmaps. And meanwhile, the big cloud providers are strong-arming clients into massive multi-year data storage contracts, basically telling them, hey, you can't build an AI future on legacy servers. The wealth isn't being created here, it's just being extracted.
Which brings us to the most brutal part of this autopsy. Visualizing the slaughter, the 95% failure rate.
Let's step out of the boardroom for a second and look at the actual cubicle-level reality. Because the ultimate test of any tech is what employees actually use when their boss isn't looking over their shoulder. And the reality on the ground, it's an absolute disaster. MIT researchers recently dropped a bombshell finding. A staggering 95% of generative AI pilot programs fail to ever make it into full production. Just think about that. S&P Global found that nearly half of all corporate AI initiatives are just abandoned entirely before they even see the light of day. IT leaders are waking up in cold sweats, dealing with fragmented data and these wildly spiraling token fees.
S&P Global actually summarized this perfectly with a quote that just chills you to the bone. Out of every 20 projects, 19 are quietly dragged behind the woodshed and killed. That's the sheer volume of wasted capital and quiet institutional damage going on right now. Enterprises are finding out the hard way that generative AI is not like traditional software. It's totally unpredictable. The exact second a business realizes their shiny new AI agent can accidentally delete a client database or hallucinate pricing rules that actually break federal compliance laws, well, the legal team steps in. The project gets paused, then it's underfunded, and eventually it's just forgotten. Let's look at a very specific casualty of this adoption crisis, the collapse of Microsoft Copilot.
If you want a microscopic case study of this failure, look no further than the supposed flagship of the enterprise AI push. Microsoft went hard, aggressively bundling their $30 per user Copilot add-on into their massive commercial ecosystem. They billed it as the ultimate corporate sidekick, right? Well, out of 450 million commercial office users, only a microscopic 3.3% actually converted to paid Copilot seats. 3.3%. The gap between the relentless marketing hype and the actual number of willing buyers is just staggering.
And it gets even darker. For the companies that actually did buy those expensive licenses, a massive adoption crisis started unfolding almost immediately. The ugly truth is that paid market share plummeted from 18.8% down to 11.5% in just a 6-month window. Companies were shelling out cash for these premium seats, and within half a year, they realized their staff simply stopped opening the tool.
Now you might be wondering, why are they abandoning it? Well, from the worker's perspective, the tool just makes things up. It hallucinates critical data. It inexplicably truncates large spreadsheets. It completely fails to follow strict corporate formatting rules, and ultimately, it just creates endless work for the user. Listen, employees aren't lazy. They're highly efficient. If an AI tool takes 10 minutes to generate a report and then requires another 5 minutes of intense double-checking to prevent a career-ending error, a human is just going to do the task manually in 7 minutes. It really is that simple.
So what are the macro consequences of all this? Let's zoom out and look at the historical warning signs.
When the gap between massive capital expenditure and actual revenue generation gets this incredibly wide, history tells us exactly what's coming next. Right now, tech giants are setting upwards of $50 billion on fire every single quarter building infrastructure, just praying that future models will somehow solve this ROI problem. But guys, we've literally seen this exact movie before. Back in the late 1990s, companies like Cisco and WorldCom spent hundreds of billions laying fiber optic cables, absolutely convinced the internet would change every business model overnight. And yeah, the internet did change the world, but not fast enough to save those companies. The hardware was built years before the consumer utility actually arrived. They went bankrupt, the market crashed by trillions, and those massive fiber optic cables sat dark and empty for a decade. Today, we're building a massive physical infrastructure for an automated workforce that simply does not exist yet.
And to seal this sense of impending doom, Gartner recently put out a grim forecast. They estimate that 40% of all agentic AI projects will be canceled by 2027 due to rising costs and a total lack of business value. When Wall Street finally wakes up to the fact that these multi-billion-dollar data centers are mostly just generating bulleted summaries of internal emails that nobody even reads, the market correction is going to be brutal. And the ones left holding the bag, those legacy enterprises that diverted their crucial capital to fund these AI vanity experiments. So the crucial takeaway from this entire autopsy is this: the bubble isn't waiting to burst. If you look inside the IT departments of the world's largest companies, it is already deflating. The narrative that forced every company to buy a large language model just to survive, it's fracturing right now. It was a brilliantly executed fabrication designed to siphon billions of dollars from corporate cash reserves straight into the pockets of a few chip manufacturers and cloud providers. The margin pressure is entirely real, enterprise budgets are drawing up, the IT bills are finally arriving, the licenses are expiring, and everyday workers, they're just going back to basics.
Artificial intelligence will undoubtedly shape our future eventually, but right now, this $500 billion lie is quickly running out of time. Big tech is pricing AI products like luxury services, while everyday office workers are treating them like erratic spell checkers. So I'll leave you with this final provocative question. Looking at the sheer scale of the failure rate and the undeniable historical echoes of the Dotcom crash, are you Team AI or are you Team Skeptic? Let's debate this down in the comments. Thanks for joining me for this explainer, and stay focused out there.